this kind of interesting crossroads. Are we really going to start accelerating the curve? I certainly don't think we're going to dip, but what's that angle of so we have the experts here to discuss. It's going to be very interesting to hear what their individual units are, but also are doing, but also kind of the overarching theme. And thank you for making a self-introduction about what you do and what your organizations do.
So my name is Abigail Noble. I work at the World Economic Forum and lead the work on impact investing. We define impact investing as an intentional strategy to create social and financial returns or impact that's actively measured. And what's key in that is that intention matters and that it needs to be actively measured. We came about looking at impact investing after hearing from several different stakeholders, from governments, from social entrepreneurs and business entrepreneurs, and from investors, that this was an area that was discussed a lot. Maybe there was a hype there, maybe there was a lot of potential, but they just didn't understand it. So the World Economic Forum, through its community-powered events like Davos, through its ability to interview and work with the senior decision makers, heads of state, ministers, CEOs, executive directors of social enterprises, leading academics, we try to fully understand the full range of constraints and possible solutions in the sector and nudge it forward. So over the past 2.5, 3 years, we've been looking at the impact investing space and said, governments who are increasingly facing fiscal constraints, their budgets have been constrained by the financial crisis and less tax revenue that they've been able to collect, but at the same time increasing social needs, higher rates of unemployment, greater needs for education and human capital development. Investors looking at a very volatile, over the past few years, financial markets, especially after the crisis in 2008 with Lehman Brothers and mortgage crisis and all of that, realizing that they needed to think about more community engagement, think about recruiting the best talent, having a really strong brand, and just being better publicly global corporate citizens. And then social enterprises that were saying, we get some money from grant capital, we've got business model that brings in some revenue, but if we really want to take a more medium to long-term scaling strategy, if we want to expand into new geographies and reach new customers, we need to think about different forms of investment capital. Where are all these investors? What are the different kinds of debt and equity that we can attract and that will work with our double bottom line? So we've been trying to catalyze and nudge the impact investing space from all these different angles. We're closely involved with the G8 Social Impact Investing Task Force and working with governments and how they can create policies that are conducive to scaling social innovation and investment policy. We work very closely with the investors, with pension funds and private equity funds, insurance companies, banks, and what we're hearing is that insurance companies see impact investing in things like green bonds as a way to get better long-run financial stability. So if you're investing in things that reduce the risks of climate change through green bonds, when there's a drought or when there's a flood in the future, you're going to have to, if you're an insurance company, there will be less or fewer payouts because the environmental sustainability is stronger. Or for a pension fund, they're looking, or they're asking more, and this is coming a little bit more right now from European pension funds, of ESG criteria. And they're asking that of private equity funds to do those screens and to invest in impact deals. So we're working with private investors as well to help them figure out strategies in the impact investing space, governments to look at impact investing policy, and then social enterprises, how they can work more closely with investors, how they can figure out the right governance structure as they work with investors, and what are the products that will help them meet both of their double bottom lines or triple bottom lines in a responsible way to their customers or beneficiaries, to their investors, to their employees. So So in short, we at the World Economic Forum are looking at how to catalyze and nudge the impact investing space from multiple angles. We don't make investments ourselves, but we very much try to usher those actors who can make those decisions and can take those actions along the process and give them the insights and the tools and the resources that they need to make the best possible decisions.
My name is Mitchell Strauss. Someone asked whether when I said my name I was using my real name, and my real name really is Mitchell. And I come from a U.S. government agency called the Overseas Private Investment Corporation. There's an acronym. It's OPIC. It's not OPEC. So we do not have really anything much to do with oil supply. Instead, what we do is provide financing and political risk insurance to assist U.S. investors with their projects in developing countries. And we've done this for about 40 years. I work with a small staff of about 200 people, and we are very successful in that somehow, while promoting development, we generate for the United States Treasury more than $1 million per person. We operate at no cost to the U.S. taxpayer. Amongst those 200 people are a number of individuals who could do other things with their lives, who probably don't like being called government bureaucrats, but instead are dedicated to making the world a better place for others. One of our priority initiatives is the development of this sector known as impact investing. We're quite fortunate to have one just recently, as of yesterday, departing woman named Mimi Alamayehu, who's going back to Africa. She served as our executive vice president and did great things for us with our entree into great transactions in Africa. And our leader is Elizabeth Littlefield, who has been a real champion of the impact investing space. Now, Abigail is another champion, as is John and Dirk. And as an industry, we struggle with the definition of impact investing. The G8 process, which involves, we hope, a very detailed discussion of what the G8 countries and their leaders can do to promote the space. As recently as, I guess it was last week, beginning of last week, we all agreed in a meeting in Oxford, England, not to discuss the definition because it would railroad the entire meeting. So there are those that believe that there's a difference between investing with impact and impact investing. And I don't really personally think that we should spend a lot of time on definitions. One of the things that we all know is that the people of the world have some really huge problems in front of them. We can sort of agree probably as a group, and I'm not sure who you all represent, I know some of you, but that there are these sectors that, have to do with basic human needs. Food, water, housing, education, energy. There's about seven. Water and sanitation, of course, clean air, everything that we need to live as people. And livelihoods, jobs, small and medium enterprise, access to finance. These sectors have had a lot of aid, directed toward them. And what we're seeing now through the sort of intersection and collaboration of not-for-profits, young, smart people, foundations, international development institutions, and those from the Nordic region have more time when it's dark to think about how to help people. And they're particularly enlightened. So what we're doing now is trying to create for the world and for the people with money, a little bit of money and a lot of money, ways in which they can participate in what we all view as sort of the future of our children. If there's places in the world where there's such hardship that it sort of begets terrorism and unrest, we all suffer in one way or another. So it's quite an amazing thing that's happened, sort of led by a gentleman named Sir Ronald Cohen, who's a famous venture capitalist. And he's brought this up, that's my understanding, in front of the G8, and we all hope that through this process of establishing national advisory boards in the G8 countries, those boards populated by people from those countries who've mapped the space of who's participating and are bubbling up through public inquiry and meetings, all the things that in each country we know would make it easier for this type of investment to occur. So we're supposed to talk about the future of impact investing. Things like, how do you increase the supply of money? Clearly there's big money. I think it's 26 trillion. I have a number from estimated by the end of 2015 in the global capital markets. How do you take that amount of money and take some of it and just sort of move it over towards socially responsible investment, public equity, all the way over to little collaborative efforts, put together by people with a desire to do whatever, end hunger, promote women. Some of the most innovative models, for instance, involve microfinance institutions, sometimes predominantly women, who not only get small loans, but may be able to get healthcare services via their mobile, barefoot lights, D-lights, all these little teeny lights. I have the opportunity next week to address the children of Opick employees. And mommy and daddy go to work, and what do? Well, all these little things like one light, if that's all you've got, but all of a sudden you can read your book at night, I think that resonates with children. So what we're trying to do at Opick is build a suite of products or windows where people, always with a U.S. connection, can access financing. We go out of our way to support transactions involving U.S. small business or cooperatives. And I think we have a lot of U.S. small business people in this audience tonight. So to the extent you're doing things in developing countries, come and, look us up on the website or call us, and we can make available, contact information across the United States government. Because this is a priority for this government, for all governments, and as difficult as it is to believe that there can be change when a bunch of people get together at high levels and attempt to make decisions, I think, as John noted, we've made an incredible amount of progress since this topic was just the name on an agenda at a meeting about, I think, 2007. And the agenda was, how can we invest with more impact? And that was where this came from. So when you look back, you can be heartened at the accomplishments. This is your 5th anniversary.
Fifth anniversary,
I
yes.
commend you for that.
Thank you. Thank you very much. Thank you.
We have all of this. We have the Global Impact Investing Network. We have a rating system. As John noted, we're building the infrastructure all across this whole sector to make it more mainstream. And unfortunately, we'll probably all be discussing whether or not, you've seen the shades of green we had this morning from our colleague from Office Depot, impact washing. you know, who really cares at the end of the day? As long as we're able to move capital from those that have to those that need, we're doing the right thing. So thank you for having me.
No, thank you, Mitchell. Thank you.
By way of introduction, as Mitchell said, my name is Dirk Elsen, and I indeed come from the northern region in Europe. You can't imagine how much fun it is to come to Miami in April, where it's 80 degrees and you can lie on the beach. I mean, that doesn't happen in my part of the world. Main reason why I'm here actually is I owe John a debt, because last year I bailed out, I think 2 days before the conference, and I've come to appreciate John as a very generous and great host, but he can get really annoyed when you let him down, I can tell you. So, that's what happened last year, and I said, come hell or high water, I will be here.
Thank you.
I'm really happy to be here. By way of introduction, what I do, I represent a financial institution called the Triodos Bank. If you visit our website, it says that we're global leaders in impact investing. Now, whenever I travel, I get much more humbled because I found out that very few people have actually heard of us to begin with, which is perhaps unfortunate. And sitting in between the giants of the World Economic Forum and OPIC, I mean, hey, what can you say? Triodos is a financial institution that was set up in 1980, so about 35 years ago. And the only thing we do is deploying money for positive change in society. And we do that across the full spectrum of financial services, and we do that on a commercial basis. So we're not philanthropy. We're not development aid, we're a commercial financial institution that on the one hand is a bank, so we have a banking license and have banking operations in 5 European countries, and we have an impact invest or a fund management subsidiary that was set up also in 1994, so quite a few years ago. And I guess we've been doing impact investing before the term was even coined, and I'm really happy that that term is there because it really helps people to rally around a little bit of a common cause. We deploy money across the full range, and I think that's actually important to emphasize. It's not just funky private equity investment funds that work in emerging markets, but it's also just giving people that want to deploy their money for certain reasons, for good reasons, to improve society, to allow them to put that in a bank deposit so that the bank actually lends money to small entrepreneurs, be it in any of the social sectors, health, housing, agriculture, biological, or organic agriculture as you call it. So that's what we do. I could go on for a long time, but I think we should talk about the future. And you can always come up and talk to me. You can visit our website, write me, be happy to speak with you.
If I would ask you, what do you think is the thing that we should most focus on in this sector from an institutional basis in order to, again, increase the velocity of both change and capital deployment? Is there any one thing or two things, or is this a question of a number of things that, you know, we're steadily bumping along?
Who are you at?
Anyone who wants to.
Well, I'm with two ladies, so I mean, I can't speak for
I would, you know, I'll throw this in. I think certainly near the top of the list, and it's something we face all the time with this conference, is just communicating what this is about. And I think there's a tendency, this is my song, so I'm going to sing it, that, you know, a lot of the strongest cities and players are in cities like New York, in San Francisco and DC, and there's a certain vernacular that develops, and many of them went to certain schools, and these are wonderful schools and wonderful institutions. But there does, you know, there's, with its human nature, to develop kind of groupthink around how these, you express these things, and I have a tendency for a number of reasons to express these things differently, and I think, you know, you almost have to have a kind of a 2-track or 3-track strategy in localization. This is a lot of, you know, it's like, where does it ever end? But certainly communication is always a very, very important issue. And I'm going to argue for something. I'm going to be the contrarian here, and I'd probably get a whole shot in me. But, you know, one thing is, I think it's very important that we codify this and be able to speak the language of financial markets. But I have to be honest with you, I don't think a lot of these money managers are quite as stupid. I do think they get it. I think we have a very strong and positive argument still, and I'll play the contrarian, of this is just the right thing to do. And I think, I think we need to double down on that side as well. And I think we need to show leadership on that side and quit being, my sense, and I'm not in all these meetings, is this defensiveness of trying to get, so close to certain numbers and improve certain numbers. Whereas I think, and I have seen certain surveys, is that, there's certainly a material amount of investors who are not, they're not only after the number, but we just have to do a better job of communicating, the metrics that we do have. We don't have to have perfect metrics, in my view, and we shouldn't let us hold that back. And maybe it's not holding people back, but my inherent sense is that let's double down on this, and that let's not be afraid to challenge financial markets, because there's so much nonsense in financial markets. We're not going against a perfect opponent here, and I think you almost have to attack the fact that regular financial markets are in and of themselves are not perfect, and there's a lot of things that you certainly can question, and I think that kind of throws people back a little bit on their heels, but I'm all for being aggressive and saying this is both the right thing to do and you can make a very good return.
So I would just add to that, in that I think communication is very important in raising awareness. We looked at the GIN impact base statistics, and out of the impact investment funds that they surveyed, over 70% of them said that they were targeting 11% or higher ROIs, which is pretty significant. And this is targeted, not actual. When they actually exit, it might be, a bit lower than that. But that shows that impact investment funds are looking at market rate returns. And to your earlier question about thinking about important things for moving institutional capital, or thinking about it from the institutional perspective, one statistic that we've been looking quite closely at is this number of $41 trillion that the baby boomer generation is going to transfer to the millennials over the next 4 decades. So that's pretty significant when you think about, the billionaires right now, and that's the main source of high net worth individuals and private capital. $41 trillion over the next 4 decades. It's a huge amount of capital. When you speak with wealth advisors at banks, very few of them know what impact investing is, and what are the different products or vehicles available. If a high net worth individual asks a wealth advisor, I'd like to do something with a little bit more environmental responsibility or social impact, they refer their client to a philanthropy division or to charity. So this concept of impact investing is still very nascent within some of the professions that really should know more about it. So communication and awareness is really important and significant there. What we're seeing, and I see Jamie Jones in the audience at Northwestern, a lot of universities, a lot of business schools are starting impact investing centers. I was at HBS earlier this week, and they're looking at impact investing courses. As Columbia University has an impact investing course, Duke, the Center for Social Entrepreneurship, impact investing initiative also does a lot of work in impact investing. So universities are, I guess, priming the pump of professional expertise in the impact investing field. We see through the World Economic Forum that a lot of banks from the leadership level are saying it does make sense, but we don't yet know how to build out our impact investing practices. It's going to take a little bit of time, but when we have the top universities, the top business schools looking to create curriculums and awareness around impact investing, I don't know about you guys, I get between 15 and 20 emails a week of people who are graduating from universities or business schools or public policy schools or just looking at a mid-career change who want to work in impact investing. So there's demand for work in impact investing. There are high net worth individuals who want to make impact investing part of their portfolio. And then there's, from the leadership perspective, how do we become better global corporate citizens? So it's going to take time, but I think the field is moving in this direction, and all of us here can do our part by talking about impact investing, by asking our wealth managers, or, I just asked my bank a few months ago if they had any mutual funds that were socially responsible. And the guy said, "You're the first person to ask me this." And I scratched my head. I said, "Are you serious?" So if more people ask that, then hopefully they'll start to offer more products, and the field will begin to move.
in terms of the communication, thank you. Of course, I agree. I think there's also one thing that we should start doing less, and I've heard some of that also during the conference, and that is instilling fear in people, and just constantly threatening with God knows how many crises are around the corner, that apocalypse is dawning on us tomorrow or the day after tomorrow. And I thought, I'm not saying that there's no crisis, I understand you well, and I'm probably not the best person to judge. But what I really liked was the gentleman from Office Depot, I think Yilmaz was his name. I mean, if you just listen to him, he was keyed into what actually inspires people, what drives people's decision making. And bottom of the list, I think, was NGOs telling people what to do. I mean, I thought that was very, very significant. For him, it makes sense, a triple bottom line. So a people, profit, and planet approach in your business. It just makes business sense. And I think the organization I represent is just an example of that. We provide stable, long-term returns to investors, be they depositors or be they impact investor and impact investing funds. And if you compare those to what are commonly known as the large systemic banks, then I think we're not doing all that bad actually over the long term. So let's instill less fear and let's be much more positive in terms of bringing people on board. Because at this moment of time, I mean, if we represent 1% of global assets under management, that's probably a pretty high estimate. And I think that's we've got a long way to go.
Well, I agree with everything that they said. We talked earlier about the supply of capital. I think in real life, the large financial transactions occur in lots of a couple of 100 million, 50 million per investment. Getting investment sizes appropriate in impact vehicles is one of our challenges. We've had the impact base, which is part of the global impact investing networks offering. You know, it's password controlled and you have to be a member to access it. That makes things a little bit harder for people. In the future, there ought to be a way through GEARS ratings, which is the Global Impact Investing Ratings Service, to access social return information and environmental information along with an S&P or other financial rating, just as a matter of course. It will be normal, like seeing how many calories are in a box of cereal per serving size. And we'll have some faith in those things. Things I've heard about lately are social return auditing firms, just like regular mainstream financial auditing firms. I've heard about social entrepreneurship franchising. That's one of the things that can help us scale great ideas. Many of the ideas are for-profit or low-profit, but many entities, I see some friends in the audience, have elements of cash flow in them. And those can be scaled. And what constrains us are human resources. So ultimately, there'll be a way to cycle capital by size just normally into buckets of different types of investments. Fixed income return instrument with a 7% return over 10 years. There's an array of them. We ought to be able to get them off of Fidelity or whoever, T. Rowe Price, who we shouldn't be calling in and saying, have you got any impact investing opportunities or mutual funds? It shouldn't be, what's that? I actually do this once a year at least to try and get my brokerage firm to come up with some answers. So since we put our money where our mouths are, every day when we make choices, no matter what it is we buy, I thought the Office Depot presentation was superior in this regard. When you see labels that'll tell you sourcing, and we're seeing this happen every day. And one of the things at OPIC we're trying to do is present to the world an opportunity to participate in funding our projects, because we're already checking for governance and environmental benefits. We track the jobs, we track metrics, and people can co-invest and actually go along on this ride. It's just that very few sort of mainstream options are available to large investors, high net worth investors, money managers. No one knows exactly where to go right now to get these investments.
Except Triodos.
Well, I mean,
They make their own.
No, but I mean, I think it's actually a very interesting point you make, because one of the things that I think we're lacking is somehow a market that brings supply and demand together. I actually don't think there's a lack of money. I think there's plenty of money around, and it's just hard work to go out and get it. And how do you bring that together? And I sometimes go to these conferences where high net worth, well, the people themselves usually don't come, but let's say people that represent them, or family foundation people. And then you see them standing hand-wringingly in the corridor and say, God, we really want to do impact investing, but where do we go? How do we get this invested? And there's somehow, and I'm apparently not good enough in terms of explaining them, well, you not just look at us. I mean, but there's hundreds of firms that are actually active in this. In the financial inclusion space only, there's over 100 well-established, recognized investment vehicles that you can use. And somehow supply doesn't easily enough find demand, and we're always looking for something new. And I think that's really where we can learn a lesson too, is look at what works and try to leverage that. And I think that's something for the World Economic Forum and for OPIC to do, actually.
Well, we're actually working together with Abigail and the World Economic Forum on this notion of aligning capital and making it easier for parties to come together and each play their role. There are institutions and foundations with grant monies that are available either to place in the bottom most risky tier of financing vehicles or to stand alongside to reduce risk. We have risk mitigation products. We have aligned interests among the International Development Finance Institution with other foundations. We just did a transaction for low-income schools in Kenya and soon to expand, where poor urban children's families pay $60 a year for a world-class curriculum delivered on tablets to teachers who come from the community. And it represents a financing structure where there's a foundation's money, private money, a major corporate's money, and a couple of three incredibly dedicated young people who see education for the poor as something that can be a large opportunity, not only to educate, but it represents a market opportunity with profit one day. So we have an awful lot of challenges, and yet we've made a lot of progress.
I'm going to ask one last closing question, and I want to thank my panel again for being a part. And let's imagine we're 5 years on, we're at the 10th annual Impact Conference, we're holding it on a floating barge, which is totally sustainable in the middle of off the beach here, and a suntan lotion provided. And is there one prediction you'd like to make? Because I'd like to hold you to that prediction 5 years from now and remind you, and then I'll ask this one other follow-up question. Is there any region in the world or any particular countries that you think will see in the next 5 years a real application and growth and boom in this?
I think there are going to be large portfolio opportunities 5 years from now where different types of instruments will be available in portfolios where you have risk diversification across countries. There are lots of early stage equity opportunities, but one at a time, they're very risky. If you put them together in a pool in one country, or you consider putting them together in a larger regional pool, and you add in some risk-tolerant investment, the chances of those smaller companies growing up with managers that'll watch and nurture them to the next stage become better. So I see bigger vehicles with different types of instruments in them. And I searched my little notes here. Apparently, India has mandated that certain companies put 2% in CSR investments. So as the G8, the G20, and other governments promote good corporate citizenship through things we've heard of today, like how people buy product, how they nurture their supply chains, we will see more money flowing from many different perspectives into better long-term sustainable investments.
In 10 years' time, I hope we're back here in South Beach, because I really like it here, as I told you. I think that will be good to begin with. I think it builds a little bit on what Mitchell was saying. I think what is incredibly important is we're all very committed people. I mean, the big disadvantage of these types of conferences, they're all love fests of the converted, so pretty much people agree with each other. We need to bring many more people in the tent to really be successful, to really bring it to scale. We need to have the guts also to invite people that hate our guts. We're very reluctant in doing so, and oftentimes when you invite them, they don't want to come to begin with. So I think we have a problem there. We need to get out of the tent, because if we want to be successful in 10 years, we've got to go for 1% of global assets under management. Well, 50, I don't think we're going to make it in 10 years, but I mean, we got to get much closer to that 50%. So scale is of the essence. That means much more outreach, both into the retail investor community as into the institutional investor community, and there's a lot of work to do to really get there. In terms of countries, I'm intrigued by your country question, because obviously we're always, I do most of my work is in emerging markets, so we're always looking at the next frontier. If you look at the next frontier, one of the really undiscovered markets that we're quite interested in is Myanmar. It's very hard to say where that's going, but it's a sizable market, and it's certainly something that we're eyeing at this moment of time. But then again, it may be a big failure in 10 years, because if you look at Central Asia, who would have thought that Azerbaijan, by a long shot, is the most successful country in the financial inclusion space in that region? I mean, would you have guessed? I wouldn't. Or you would. I mean, come on board. We need people like that. So those are the things that I think we should be looking at.
John, I'd just like to take this opportunity not only to thank you, but just to give as a first announcement, we were able at Opick to do $3.9 billion in positive development investments last year.
Wow, that's fantastic.
And 2.7 of those were in impact sectors. So that's my colleagues. The biggest sector that we supported was what we call renewable resources. So that includes renewable energy, forestry, water. And the next largest was in SME transactions, financing vehicles. So that's 2.7 out of 3.9 billion. Now of those, we went through a pretty elaborate process which we call tagging. And many people are attempting to tag those investments that had impact intent. And it's very difficult. And I mean, as we said at the outset, there are no fast rules and people are still arguing. But metrics are a key part of the exercise. We have a whole group that tracks metrics, and clients themselves, some of them are very metric heavy and others are, a little bit lighter, but they clearly demonstrate that the intent of the investors and the structure of the project was to do the right thing in terms of financial, social, and environmental return. So we had 222 million that we considered to be impact intent. And what we're all trying to do is just grow that number year after year to the best of our ability and grow the sector itself, the investing with impact among all of us. So I just wanted you to know, John, that we saved that little tidbit of announcement for you.
Thank you very much. Thank you. Absolutely.
So my prediction, or maybe my hope, is that in 5-10 years, if we say that there's a panel that's about big picture thinking in impact investing or the future of impact investing or what is impact investing, most people will yawn and say that's
great.
boring. Because
That's great. That's
everybody knows what impact
Yeah,
investing is. We
yeah.
don't need to discuss it. And the conversations will be a lot more about, we invested in these 7 things. These 2 education companies, this one had this kind of impact, that one had that kind of impact. We measured it this way, we used these kinds of debt and equity instruments, and now we're trying to figure out how we can do more of this and less of that, and you start comparing and thinking about what's the next step and how do you make these investments better, how do you scale your impact, with, I don't know, more best practices. So we need to take the conversation 2 or 3 steps beyond, but we can't do that until we have more visits and more people operating in the space. And thinking about environmental and social indicators just becomes part of how people make investment decisions. It doesn't need to be something that needs convincing or that people need to discuss why they're doing it. And I've been looking at a lot of different examples over the past few decades of things that seemed like a tough sell in the beginning, whether it's no smoking in public places in New York City, or the Give a Hoot, Don't Pollute campaign. Like, can you believe that a few decades ago it was okay for someone to just throw something on the sidewalk? If I see someone litter, I think, how rude. If you know that a company employs sweatshop labor or commits egregious environmental violations, that affects the brand of that company, and you're probably not going to buy actively a lot from them. Wouldn't it be incredible if we started to think that way about investments? And there's a lot more transparency about the practices and the second and third order impacts of different products and services that we use. So my hope is that maybe it's ambitious in 5 years, maybe 10 years, we'll be at that place, and conferences like these will be saying, these are the best practices, this is what we've done differently, and it just raises the bar.
It sounds like we need to game this, and I need to develop an annual transparency award. So I do my part. There's going to be some questions. I think we're going to have to do it out the door. I apologize because I want to be respectful for everyone who's been here, but what a terrific panel. Thank you so much.